Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. But let's look at what the markets are doing this afternoon as well. And when you're looking at the Nifty 50, recovered from the day's lowest point as of now, 19,650 are the levels is what the Nifty is keeping and holding on to as well. Since the last couple of hours, it's maintained and remained in that level as well. So yes, recovered from the day's lowest point, but still as of now, Nifty trading with subdued cuts of around 0.1% in trade. Let's look at what the Nifty Bank is doing as well, and where is that holding on to as well. We've seen Nifty Bank also in focus today. Nifty Bank is as of now trading a bit subdued as well, down almost 0.08% in trade. Broader markets, that's the one that we should look out for. Nifty Small Cap is holding on to mild gains over there. Nifty Mid Cap a bit on the red side, but yes, overall, when you're looking at the broader markets today, performing in tandem with the benchmark indices as well. Not much of an outperformance in the last couple of hours that we've seen for the broader markets as well. Looking at the sector-wise, what is doing well today and what is holding on to gains is Nifty Media. That's holding on to some bit of a gain there. And Nifty Small Cap is the only other one that is holding on to gains. Other than that, all the sectors and everything is trading in the red, whether it's a metal, which is a top sectoral loser. We have the Nifty Realty, which is down and out, almost 0.6% in trade. So not much bit of a gain coming in or green coming in on the screen as well. In terms of some of these individual movers that are there in trade as well, on the decline side we have something like an Astral, which is down and out in trade. IGL, which is also trading with cuts of almost 3 to 4% in trade. Wipro on the back of its numbers is subdued as well. Bandhan Bank 2 under pressure as well, and Dabur 2 after announcement came in terms of its subsidiaries and some issues on that front in the global markets is keeping Dabur under pressure as well. Now, what's holding on to gains today and what is doing well in trade also? Let's look at some of the stock names like that. We have IndusInd Bank that is holding on to gains after its numbers, holding on to strong gains on that front as well. Keeping an eye out on something like a Shakti Pumps on the back of its order is holding on to gains as well. Shakti Pumps is up almost 20% in trade as well. Other than that, we have from the IT space, we have something like a Persistent System that is holding on to gains. Coforge, mild gains coming in for Coforge after its numbers as well. Slight bit of a gain in terms of Coforge there. Nestle, look at that one, right? Reported its numbers, saw a bit of a correction coming in when you talk about in terms of the volume growth number, but then again recovered over there, and Nestle too holding on to strong gains over there. Other than that, Bajaj Auto, Hero MotoCorp, Aditya Birla Fashions, all of that holding on to gain as well. But let's get started with all these individual movers in trade. And today on the technicals, we have Kunal Bothra, while from the research team, we have Lisa as well as Ashesha joining in with us as well. A very good afternoon to all of y'all as well. And LTIMindtree, that's the top gainer coming in the IT space as well, holding on to gains of 5.5% after its numbers. And today we're joined by the management as well. We have Debashish Chatterjee, CEO and MD at LTIMindtree, joining in with us. Thank you so much, Mr. Chatterjee, for joining in with us this afternoon. And let's just start by talking about your numbers, right? You sounded very confident about your second half and being stronger than the first half of FY24. What gives you such kind of a confidence?
See, as we have been always saying that this whole year has been a very cautious outlook, and now we are very confident to say that the cautiousness will continue through the rest of the calendar year. But having said that, we have closed many opportunities in Q1 and Q2 which are ramping up. So in spite of the challenges that we see in Q3 in terms of furloughs, in terms of some ramp down, etc. But given the fact that there are a lot of ramp ups also which will happen, we are very confident that our second half will be better than the first half of FY24. And apart from that, we are also hopeful that many of the clients are now talking about their budgets for the next year. And most of the clients that we work with, their fiscals are January to December. So I'm hoping that there will be some spending which may come back as we go along. But at least based on the portfolio of clients that we have and the behavior that we see, we are fairly confident that our H2 will be better than H1.
Good afternoon, Mr. Chatterjee. This is Cheryl also joining in the conversation. When you spoke last with ET now, you said that the double-digit growth was unlikely in FY24. But you think it will come back in FY25, and also for FY24, can we expect at least 8 to 10% growth to come in for your company?
Well, I think it's difficult to call out at this point of time because nobody really anticipated the level of cautiousness that we have experienced from the clients. And that's why, last year we were very confident that we should see good growth. But having seen the Q1 and Q2, it is probably not fair to, call out anything specifically. But as I said, that we are fairly confident that our second half will be better than the first half. So you can do the maths and you can, we have to probably wait for another quarter to see where we eventually end up. But definitely we are confident that second half will be better than the first half.
All right. Mr. Chatterjee, by when do you expect recovery in the BFSI? And also, you could talk to us about Q3 furloughs. Are they expected to be higher than usual given the fact that we are already in the quarter?
Well, I think, the macro is not really helping BFSI, especially, if you really want to see the improvement in BFSI, probably one macro factor which has to change is the interest rates need to start coming down, which I don't think we can say anything at this point of time. Yeah, in terms of furloughs, furlough is a phenomenon that we always see in the Q3, and this quarter is not going to be any different. The only difference that we find is that typically the furloughs is to be restricted to a specific set of clients within specific industry segments. But this time we see that the furloughs have been more broad-based across almost all industries, many more clients. So essentially the furloughs that we are expecting in Q3 will be higher than as we have seen in the previous year. But having said that, there are also ramp-ups that we are having in some of the deals that we have closed, as I mentioned. So when I say that H2 will be better than H1, I'm actually taking into account and considering the furloughs as well.
Also, just what is your margins were resilient this quarter? Do you expect it to hit that 17-18% mark by FY24 exit?
Yeah, what we have said that 17 to 18% is what we expect as an exit in Q4, and we are pretty much on track. And as you probably know, and I have mentioned yesterday as well in my prepared remarks, that there is a margin expansion program that we have put in place in the last 2 quarters. And the margin is a discipline. It's not something that you can do just one quarter. So that discipline is already in place. And what you see in terms of holding on to the margin in spite of giving a wage hike, which had a 200 basis points impact, is basically a result of the margin expansion program that is already in place. So we are very confident that our margin story will hold good. And by Q4 exit, we should be in the range of 17 to 18%.
Also, what about deal wins? Have they been strong? They have been strong at $1.3 billion. Is this going to continue?
Well, I think there are the deal activity right now is fairly significant, and that's what we have been always saying, that we live in this paradoxical times, that deal activities are quite vibrant. Our pipeline is very strong. We are closing deals in every quarter. We have quite a few deals that we need to close this quarter as well. But having said that, I think we need to also account for the fact that many of the deals, the decision cycles are very long. I think that's something which is worrying us. And typically what we have seen is that there is always a budget flush in Q3 because clients try to spend a little more. But I think this particular year we are not seeing that. I think the cautiousness is overhanging on everybody's mind. So we don't really see that there'll be any excess spending in Q3. In fact, we see the contrary. That's why the furloughs are going to be significantly higher.
Right. Are you getting any early sense on client budgets for the calendar year 2024?
Well, I think we have to give it a little more time because clients are just in the middle. They've just started the process. So hopefully by end of next quarter, we'll get a better visibility in terms of how the budgets play out as far as the next calendar year and the fiscal is concerned.
All right, let me actually touch upon a very pertinent point right now when it comes to the IT sector, and that is actually headcount. Finally, some additions that you're seeing in your headcount after a couple of quarters of softness. Are you expecting the trend of headcount addition to continue going ahead, or are you seeing some other signals altogether when it comes to your headcount?
See, you have to look at headcount in the context of a few things, especially utilization. So if you look at our utilization right now, it's an all-time high. And if the utilization is so high, and we think that it will be remaining in that range for some time, we have to add headcount as we get into more deals. And the second aspect which you need to also keep in mind is say 1 year back, we were hiring ahead of time because the market conditions were also very tight. But I don't think the conditions are exactly the same as it was 1 year back. So given the fact that it is not difficult to hire just in time, and also the talent is available, so we feel that we will keep on adding headcount based on the business needs as and when it is required. But obviously the last 3 quarters or 4 quarters, we have been very focused in terms of cleaning up the bench. That's why you saw the headcount was controlled. But as we go along, depending on the business needs, we'll be definitely adding headcounts as and when it's required.
Right, and lastly, if you could just talk to us about the vendor consolidation, what's happening on that front, and are you seeing more such large deals coming your way?
Well, I can say that vendor consolidation can play both ways, but as of now, I can only say that it has been favorable to us.
Okay, Mr. Chatterjee, thank you so much for joining in with us this afternoon on ET Now and giving us an understanding in terms of your numbers. What should we be expecting in terms of the outlook going forward as well? That was the management of LTIMindtree for y'all after the Q2 numbers. But let's move on and keep it going with the stocks that are buzzing in trade, either on the back of news flows and technicals. And moving on to Nestle, that reported its Q3 calendar year 23 numbers. When you look at the numbers that came in this time around, what we're seeing, revenue growth of 9.5%, which was in line with what the street was expecting. Volume growth that came in at around 3 to 4% versus 5 to 6% was the expectation. So slight miss on the volume growth front, but strong expansion in terms of margins, profits seeing a very sharp growth. Mainly profits was aided by an exceptional gain of around 106 crores that came in, and that was something that was supporting the overall profits of the company, and that's why profits were above. But even after that, even if you subtract that amount, the profits are still on the higher end and above what the street was expecting as well. Good performance came in from the out-of-home consumption as well as the confectionery side as well. Outlook in terms of commodities, management highlights that milk maybe could be a bit stable going forward, so not much worry on that front. But coffee prices, that volatility is continuing, so that is something that they're keeping an eye out on. All in all, a decent set of numbers that came in from Nestle this time.
All right, that is Nestle for you, the first FMCG company to report its earnings, at least for today. But coming to you, Kunal, Wockhardt, how are the charts looking for this pharma company? It's rarely that we've spoken about Wockhardt actually.
Yeah, very rarely the charts have merited any kind of attention. But then except for the recent times when the stock is coming out of a major consolidation, a formation of a bullish flag pattern on the weekly as well as on the monthly charts for Wockhardt Pharma, the stock has been stuck into a range of 230 to 250 to 55 on the upside, which means a band of almost 10% for the last many months. Now, with volumes looking extremely charged up and strong for Wockhardt Pharma, over the last 4 to 5 months of this consolidation, I would believe that the breakout could happen pretty soon for the stock price. So it's a stock definitely to watch out for. We've also seen the pharma index doing exceptionally well for themselves in the last 3 months, 6 months time period. I think Wockhardt Pharma could be in a stock from the high beta space in the pharma names to hopefully perform very well going forward.
All right, moving on, let's talk about Persistent then, and that particular counter is in focus in today's trading session. It reported its earnings yesterday, and as you can see it on your screen, on back of strong commentary coming from the management, the stock is seeing a good up move. move. Also, their Q2 revenues actually came in much better than estimated. This was aided by strong deal wins. The company has reiterated confidence in strong growth in the H2 of FY24. This is in contrast with the larger cap peers like Infosys, HCL Tech, or for the matter of fact, even Wipro. Persistent is saying that they will deliver PAT CAGR of about 16% over FY23-25. This is what a brokerage firm, Motilal Oswal, actually had to say. They're also saying that the deal wins will supporting the strong growth for Persistent in H2 as well. So yes, strong commentary coming from the management, thumbs up coming in from brokerages, and Persistent for you trading higher by about 3% as we speak.
Let's move on to the next one, and that is Aditya Birla Fashions. And Kunal, on the charts, how is Aditya Birla Fashions looking like? On a YTD basis, we have seen a correction coming in. So at the current level of 236, is it a good time to enter this stock now?
Frankly, when it's been a stock which I've been advising, closer to that sub 200 levels, and especially after that major correction, the stock had seen from the 2022 highs of 350, 360 approximately. So, which means that after more than a 50% odd correction, the stock had come back towards a formation of a base. Now, slowly and steadily, the reason for putting up ABFRL as a chart is that the momentum is accelerating or intensifying for the stock on the upside, and this could probably result into the stock not just trying to recuperate or recover the lost ground the stock has seen in the last 1 year, but possibly the trend being a lot more sustainable, something which the stock has not seen earlier. So looks attractive, would suggest a buy on ABFRL at current levels and especially on dips.
Alright, so that's the word coming on ABFRL. Ashesha, let's talk about Ultratech Cement, another major that we are expecting the earnings from today.
Well, yes, in fact, it will be reporting its numbers anytime soon. On a year-on-year basis, we are expecting a strong growth, and that is on account of lower base and weaker than expected monsoon that aided construction activity in the quarter gone by. Consolidated revenues could come in at about 15,800 crores, up 14% on a year-on-year basis. Margins are also expected to expand. We are expecting margins at 15.8% versus 13.4% that the company had reported same time last year. On a sequential basis, realizations are expected to remain flat, but EBITDA per ton is expected to fall by as much as 7% on a quarter-on-quarter basis, and that is on account of negative operating leverage that will be partially offset by lower power and fuel costs. All in all, on a sequential basis, slightly muted, but on a year-on-year basis, on account of lower base, we are expecting strong set of numbers from Ultratech Cement. Ahead of its results, the stock is flat as we speak.
Okay, the stock is flat ahead of its results. That's Ultratech Cement for you all. But let's move on and to a fertilizer name, Deepak Fertilizer. Kunal, that's the stock that you picked out for us. On the charts and technical level, today seems like the stock is a bit down and out. Last 5 days, surely it's seen a good run up. What is the indication you're picking up on the charts now?
So absolutely, the last 5 days has been fantastic for many of these fertilizer names. We've seen what's happened to the likes of FACT, RCF, etc., GSFC, and Deepak Fertilizers. No exception for the charts. In fact, we spotted this closer to the 630, 640 levels for Deepak Fertilizer in terms of a breakout. It's completed a classic bullish pennant flag formation combination on the daily as well as on the weekly charts. It's been trading above the 200-day moving average. So all the classical ingredients which we typically require for the stock to show signs of strength, breakout as well as sustaining of the uptrend, I think all of them seems to be getting in line for the stock price of Deepak Fertilizer. So looks very attractive, and I think as a setup as well as a sector move, I think the fertilizer pack should do pretty well for themselves at least over the next 2 to 3 months. So bullish on Deepak Fertilizer, and many of the other fertilizer names would look out for targets in the range of at least 10 to 15% higher from current levels.
Alright, so that's Deepak Fertilizers for you. Lisa, let's move on and let's talk about Hoodco, because this particular counter was in focus for the last 3 trading sessions. In fact, today also is making to the list.
Yes, that is on the back of OFS, Cheryl. Hoodco, it's the second day of the OFS, and yesterday the non-retailers, they participated in the OFS and they got good response of around 2.1 time, and today it's the retail investors' turn. On the back of good response coming in from for the OFS, the total subscription, the oversized, the offer size, that has increased to 14 crore shares via the oversubscription option, and this comprises around 7% of the total paid up share capital. Now around 10% of the offer shares that will be reserved towards retail investors, and the floor price of the offer, talking about the quantas of the OFS, that is at around 79.2 per share, and this is at a 12% discount to Wednesday's closing price. And the offer is being taken so that the government, they can achieve the minimum public shareholding which is required by SEBI. So yes, in the last 2 days we have seen Hoodco's shares under pressure. It's down more than 10%.
Okay, let's move on and talk about Escorts Kubota then. And Kunal, what a move that we've seen coming in for Escorts Kubota. Last 1 year, almost a 70% return from 2000 levels, today trading about 3,300. What's the view on Escorts? Should one at least book some partial profits or continue to hold this?
So I think there are 2 points to it, Vinny. One, of course, that the auto stocks have apparently done pretty well for themselves in the last 1.5 odd month of consolidation for the Nifty. I call it consolidation because we've just ebbed off 2.5-3% from the highs of 20,200 odd for the Nifty. Now the other part to look out for is that Escorts has been one of the stellar movers from the auto pack. Now in the last 1 week, the stock has corrected from 3,400, 3,450 mark to I think today's low, which is around 3270, 80 approximately for Escorts, which means a correction of almost 6% has already done for the stock price. Now I think it should be a stock which should be on traders' radar, especially for someone who's looking out for contra buy on a quality auto name. So bullish on Escorts, expecting the stock to break past about the previous highs of 3,400. So I think it's a good risk reward to enter the trade at current levels.
Okay, surely keeping an eye out on Escorts and those levels over there. Let's move on and then talk about CAMS as well as KFin, and why are both these stocks in focus? Today we have Citi that has initiated coverage on both these stocks. Now for CAMS, it's a sell rating that they've given target price of 2,200 rupees per share. Even for KFin, it's a sell rating and a target price of 435 rupees per share. So today when you're looking at CAMS, yes, there's pressure coming in over there. KFin Tech is actually holding on to some mild bit of a gains over there, 0.8% uptick. Now the main reason for this, they believe mutual fund yields, bargaining power is negatively skewed towards the duopoly, and now high potential for new businesses is there. Mutual fund revenues is something that will be dominating there, but cost, in terms of the cost investments in diversification, could be a bit of a drag. And CAMS as well as KFin, currently they are at 33 times as CAMS in terms of valuation of FY25 EPS, while KFin is at 30 times FY25 EPS as well, and that is likely to ignore the yield pressure in the domestic mutual funds as well as cost drag for the new businesses. So yes, as of now they are initiating coverage, but both of them are sell ratings as of now, so keeping an eye out on both these stocks today.
All right, moving on, Kunal, let's talk about Indiabulls Real Estate. How are the charts for this one looking like? I know that off late there's been a lot of interest in the stock. We've seen the stock actually been buzzing, a lot of even corporate news flow surrounding that as well, isn't it? But on the charts, do you think it's still an attractive bet, a safer bet to play right now?
That is exactly the reason why I picked up the stock, because I still believe that the stock may not be ripe for a breakout yet again, at least as of now. I think the stock is consolidating for the last 8 or 9 weeks approximately. 78, 77 has been a base for Indiabulls Real Estate. 84, 85 is the resistance for the stock price. Now, when the real estate sector has been doing exceptionally well, there is always bound to be those, the kind of traders who are looking out to buy the stocks which have been underperformers. But most of the time when these stocks underperform, when a sector is going into a strong breakout mode, that's generally, the point where these stocks, they would continue to remain underperformer. And in case if the sector gets into a mild correction, these are the kind of stocks which also go through a sharper correction for themselves. So these are stocks which should be ideally traded only on breakout. I believe Indiabulls Real Estate is a stock which could fall in that category. 84 plus 85, 84, 85 is the zone of a breakout for the stock price. Would recommend a buy only above those levels.
All right, so that is Indiabulls Real Estate and Kunal's rationale for picking that particular counter today. But let's talk about UTIMC, and why am I picking this counter is on the back of the earnings. If you look at the stock price, it's actually pretty much subdued in trade. At one point in time, it fell about 5%, taking the stock to a 6-week low. The company reported a drop in their net profit of approximately 8.5% on a year-on-year basis. If you look at the revenue, that declined by about 7% on a year-on-year basis. The slide in revenue and the profit led by the fall in equity yields. This is what Prabhudas Leeladar's analyst had to say on the earnings. He also said that the mutual fund yields have dipped approximately 2 basis points sequentially in the month of September, the September quarter, and that in turn actually weighed on the earnings coming in for UTI AMC. So on back of its earnings reaction, subdued earnings coming in for the counter, 3% downtick for UTI AMC as we speak.
Okay, that is UTI AMC. But Kunal, making to your list is Voltas. That's expected to report its numbers today as well. But in terms of charts, what's the indication coming in? Because now, obviously, the summer season is over. There are no AC sales. Is the chart indicating some jump up coming in for Voltas?
Well, it seems like, Vinny, because, the stock has already gone through a sharp correction. And I think from September start, 2023, that is, the stock was almost at 900, 920. Currently, it's at 830, 840 levels. In fact, today's low for the stock is around 820 odd mark, which means the stock has already gone through a 10% correction. Now, the reason for flagging of the stock is two-pronged. One is the stock has come back towards the 100-day moving average. This could be a strong indicator that maybe the mean reversion or the correction for the stock is over. The second and the more formidable reason is the stock is forming a bullish hammer pattern on the daily chart. So assuming if the stock closes at current levels of 838, 840, then this could be a confirmation that maybe the near-term trend could be on the downside could be over, and the stock may start to get into at least a phase of a bounce, if not a strong uptrend.
All right, so that's the take coming in on Voltas. But on that note, we will actually slip into a break on this edition of Buy Now, Sell Now. So I beg your pardon, Market Fatafat.
Actually, you
I got
always
stuck.
take us 2 hours before. Now I'm not going to accept that. A day is getting over and you want to get started with the day.
In fact, you know what, Vinny, I was stumped because I just realized we are wearing the shades of market green and red. Let's see
Absolutely.
which side of the market is tilting, because I can see markets are again making an attempt to break into the positive territory, isn't
Absolutely.
it?
I'm cheering for the green then as well.
Clearly you are. But on that note, we will take a break and we'll be back with more stocks to discuss on the other side.